Most people believe financial markets move because of human decisions, buy orders, sell orders, reactions to news. But in reality, modern markets move at a speed where humans no longer matter. Today, machines trade faster than thought, faster than reaction, faster than fairness. In this world, profit is measured not in days or seconds, but in milliseconds. A trade can be completed before a human even realizes it was placed. After the global financial crisis, markets were meant to become safer and more transparent. Instead, they became faster. Algorithms were built to detect patterns, predict behavior, and move ahead of everyone else. Not by being smarter, but by being first. Imagine placing a stock order. The moment your order enters the system, it creates a signal. That signal is detected. Before your order reaches its destination, another machine races ahead, buys the stock first, then sells it back to you at a slightly higher price. You don't see it, you don't feel it. The difference is tiny, fractions of a cent. But when this happens millions of times a day, those fractions turn into billions. This isn't theft in the traditional sense. It's structural advantage, and it's legal. What makes this system even more unsettling is that markets aren't abstract, they're physical. Orders travel through fiber optic cables, data centers, and servers. Speed depends on distance, and whoever controls the shortest path controls the trade. Companies have spent enormous amounts of money to place their machines closer to exchanges, to build straighter cables between cities, to shave off microseconds that no one else can match, not to create value, not to invest long-term, but to arrive first. This creates a market where speed becomes power, and power becomes profit. Most participants don't even realize what's happening. Retail investors, pension funds, long-term institutions, they're not losing money loudly, they're losing it silently, one invisible advantage at a time. But systems like this don't exist because they're evil, they exist because they're rewarded. When rules favor speed, capital flows to speed. When transparency isn't required, opacity becomes strategy. The market doesn't ask if this is fair, it only asks if it's allowed. And as long as it is, the game continues. Understanding this doesn't mean rejecting markets, it means seeing them clearly. Because in a world where a single click can move billions, the real divide isn't between rich and poor. It's between those who understand the system and those who assume it works the way they were told. And once you see how the system truly operates, you don't look at money the same way again.